ressourcer allokering.
Hello everyone and welcome to this next online physical webinar, whatever we call it today. We're going to talk about new technologies, investment and green. So my name is Varun and I'm the CEO and founder of Make Impact, an EdTech app community helping people to invest in tomorrow's world. And today with me I have Stefan, Line and Sylvester. They get like 5 minutes to present themselves in a second. What we're going to talk about today is about how technology is arising, especially in the green area, and how investors, consumers and employees are actually focusing on sustainability and how we can make a better future for the world, also in terms of how we use our money to make an impact. So first of all, I would like to welcome Stefan. So please give a brief 2-minute intro to who you are and what you do.
Yeah, my name is Stefan Kellerhauge. I have the quite ironic title of Head of Growth here in the Nordics for something called BCorp. I don't know how many of you know what BCorp is, so let me just briefly introduce you to what BCorp is. So first and foremost, BCorp is a movement of companies that sees that our economic system does not work for all. It's quite good at extracting values for shareholders, really bad of giving value to stakeholders. So we're actually in business, a movement of businesses that are trying to redefine what success looks like for companies. That's the first. Second of all, we're a certification. So all of these companies has to live up to a certain standard. So we're measuring on all aspects of business, company impact, and verifying those companies that are in our movement and want to change the economic system as we know it. And that calls for an assessment, so companies need to assess their impact. And we have made, and that's actually a technology, we have made an online platform, free to use, open source platform where companies can go in, measure their impact across 5 categories: governance, workers, community, environment, and customers. And my everyday job is to tell people about BCorp, companies about BCorp, and helping companies measure their impact in the B Impact assessment.
Thank you, Stefan. And I also think that for everybody out there as well, like I remember when I was younger and I had to buy coffee from not myself, but for somebody else, I was told like, go and buy this fair trade labeled coffee. And I was like, what the fuck is fair trade? So as I recall and how I see it with the B Corp like movement, it's like if you have a B Corp certified company, especially in the consumer brands, you actually like have one label of saying you are actually doing something for the world. I know now when I'm buying chocolate, I know that there's a company called Tony's Chocolate.
Tony's Chocolonely.
Chocolonely, whatever. Yeah. And that's a B Corp certified company. In terms of investment side and the public listed companies, there's not so many companies who nailed it to be a B Corp certified.
We have 13.
13.
Yeah.
Out of how many?
We are nearly 4,000 B Corps in the world. Only 13 are publicly listed, but actually one of those are from the Nordics, Urbit, they're called.
Yeah.
They do last mile delivery, focusing on London and Paris. So not that many.
Well, we might see more and more coming in. I know that a lot of new technology, and especially there's been so many IPOs around new technology involvements in the green technology. So hopefully we see them also on the B Corp, certified list of being a B Corp, because I think that that's a big label also for the consumer side to actually be able to, they're a B Corp certified company. Great, one check box and then get to the next one. Yeah. Thank you, Stefan. And over to you, Line.
Yeah, thank you. Thank you for coming. My name is Line Berg Madsen. I'm an attorney at law and partner at the Danish law firm Poul Schmidt, also known as Kammeradvokaten. I deal completely within ESG compliance and sustainability. It's kind of a journey for me from being an in-house lawyer, being much focused on compliance and so on, and then moving completely over to the full spectrum ESG with all its width and depth in terms of specialized compliance and risk assessments. And so a development that we've seen over the past years is that we actually when we narrowed it down to 2 dimensions, it's risk and compliance on one side and value creation on the other side. And I do reckon if you feel like, what's the role for lawyers in terms of the value creation, And I can tell you, based on several portfolio reviews of private equities and so on, that it is actually a very, very strong perspective for Danish companies, that they are so good at doing their business, but they need some kind of formalization and to get some structure and repeatedness around that, so they can actually use that very strategically and consistently to create value for their shareholders. And that's being seen, you know, with eyes wide open right now from our clients in private equity, portfolio companies, other fund-owned investors, companies getting ready for IPOs, and then all sorts of public institutions as well. So great development over the years, I'll say.
Thank you, Line. And in terms of like your background, like you are a lawyer as a background, but you have been like different places, right?
Yeah.
So I know that you've been working in family offices and working there, and also other law firms, and seeing this movement. And so you have, me and you, we know each other for a long time. In terms of sustainability, you have always had a passion for sustainability and working with that. How did you see like the last 5 years like evolving in terms of sustainability and compliance? Because I've been from the banking side, and you know, everybody is working with anti-money laundering cases right now and trying to be compliant on that side. And now, you know, all the other industries, the green technology companies in Denmark are working towards being compliant on the sustainability side. Like, what's your thoughts on that? Like,
yeah, it's a very good question. It actually used to be very compliance focused when I just started out, like plus 10 years ago, and even 5 years ago at law firms. We would always be doing reviews that were focused on, do you have your books in order in terms of compliance programs, your screenings, follow-ups, and so on. Whereas now, I think we're seeing on the value creation side that this is a true value driver in terms of getting the best talent, retaining it, making working conditions more fair, decent, and giving better diversity, accessibility. I think that's also a development in terms of climate and CO2 emissions, even though it's something that they do need to tackle from a very defensive kind of side, but also that it's interesting, it's sustainable innovation. So if you treat it like any other pipeline development and you do your evaluations and your assessments as to whether you should progress with a project within green innovation, then that's very interesting both for a company and stakeholder side. So that's also a development. And I think in terms of COVID, I think just around a year ago, we were probably looking into like, okay, is there even a market for sustainability and ESG right now? Will everybody just be focusing on trying to survive and get by? And once COVID is over, it won't even, you know, it won't even be on the planet anymore. It's just, it will have passed over, and it's all cash flow and everything. And then seeing a complete surge towards sustainable investments, and not just because of the legal frameworks coming into force, but also that there were some underlying projects and thoughts and so on that have, you know, kind of surfaced and are getting investments now.
Yeah, great, thank you. And then in Danish you call it rosinen i pølsen. I don't know what you call it in English, but you know, Sylvester, please give an intro to who you are.
Yeah, absolutely. So thanks for having me. Thanks for the invitation. So Sylvester Andersen, good to meet you guys. With Nasdaq.
What is Nasdaq?
Yeah, that's a great question. Maybe a good starting point. So I think most of people kind of associate Nasdaq with being a stock exchange. I would say at this point, the transaction part, so a buyer and seller meeting to buy or sell a share. It remains a focal point of what we do. But I would say that over the past decade, our footprint in our 3 other divisions has been increasing rapidly, especially on the data side, which we can come back to, especially on ESG-related topics. So market data, alternative data, such as ESG data. We have our listing part, and we have our market technology part. And I represent our European markets department, so I'm in charge of equities, derivatives, and other
all the financial products.
Funky, exotic products. Yeah. And then the last 3 years, I would say I've been building up our European ESG focus together with a lot of great, like-minded, purpose-driven colleagues at Nasdaq. I think we kind of saw where especially the institutional investors, so the large pension funds, where they were headed. Both, I think, because they saw ESG, sustainable investing, as being the right thing to do, something that we very much share at Nasdaq, but also because they were kind of seeing their clients, so regular pension savers like us here today, really wanting to know, is our money being invested in something that is according or in compliance with my personal beliefs? Are we investing in companies through our pension savings in companies that are producing shoes by a labor force of 6-year-old Indian kids, for instance? Is my money endorsing listed companies with 0 women in the senior executive team, on the boards, etc.? So there was an increased interest, especially for institutional investors. And then, on the other hand, what I was kind of seeing was this increasing transformation from listed companies, back then especially listed companies, kind of also realizing really the same thing, that the underlying consumers were probably demanding transformation, you know. And I think a great example is Ørsted, you know, or back in the day, Dong. They had literally 0% of their revenue coming from green energy sources, so to speak, and then now it's comfortably over 50% of all their revenue. And they were seeing the trend, the appetite of consumers going in that direction as well. So what I kind of wanted to do, and remained incredibly committed to doing, is to build bridge between those two. So between the companies that are increasingly keen to be transparent, to comply with regulation, to meet their consumers' demands for a better future, help them tell that story and help them get visibility for funding. Transformation costs money. Starting up a company, you know everything about this, starting up a company with a green mission, it needs capital. I want to help them do that, and in order to help them do that, they need to be obvious, apparent, comparable to the world, to the investors. Investors understood as not just these huge pension funds, but also family offices, also regular private investors like us here. Also people who are maybe not invested today, but they are increasingly becoming aware of the fact that there's a negative interest rate environment in Denmark and certain other countries. So there's a lot of accumulated wealth. Some might not be aware of the fact that they actually have money to spend, and it's eaten by inflation, or it's eaten by negative rates. And so you have that on one side, and then you have a lot of private clients becoming aware of the fact that you can influence, you can make an impact through your own investments. That's actually how I mean, the coffee example, it's a great one. You know, I also prefer to buy my coffee where I kind of know that, you know, the coffee, the farmers are paid fairly. But where you make the big impact is through your investments. It's a fact of life, whether we like it or not. That's how it is. And I need to make it easy for investors and non-invested folks to, you know, easily, intuitively understand, this is the footprint of my current portfolio. How can I change it in a way that is according to my beliefs on ESGs, on SDGs, etc.? That's very important.
Thank you. And I also think that you're actually touching upon like what I wanted like to start off this discussion with, like the impact activism. So what is the impact activism? It actually goes back to the 60s, where actually the hippies and like were working about like how we have to serve the planet, how we have to take care of the planet. My mother-in-law told me one day that it was before I was born, of course. That do you remember? Of course you don't. But do you remember when the milk cartoons, well, not cartoons, but there was like glass bottles of milk like put in front of your door, and then the day after there's someone picking it up and then like going it up. That's talking into sustainability in terms of like that we actually reuse the glass bottles at that point of time. I wasn't born at that time, but I remember, I think it's Tom and Jerry, like I saw it in some like cartoons or something like that. Anyway, that sustainability has been always on our mind, but hasn't been like valuated at the same level as it is right now. So the market valuation or the brand valuation of sustainability is much, much, much higher today. Like if we remember the IT bubble, like in the 90s and the zeros, where we can see now that all different stakeholders actually want to raise awareness about sustainability. So we have the consumers, we have the employees, and we have the investors screaming for this. Last year, the year before Corona, like we know we have the Greta movement, where a lot of young kids striked, tried to yell up at the governments, and they actually like made an impact because some people actually like start listening to it, right? Then we saw Amazon's employees striking because they didn't feel that their employer were actually doing fairly in terms of like how they work with diversity and how also they work with like actually having a business. And lastly, in January, we saw that a community on Reddit actually started, pushing back to the Wall Street guys. Now I'm looking over to you, Sylvester, right? Like you're one of those guys. No, I'm just kidding. But as a movement back and actually trying to, push back on these things. So I'm really looking forward, actually, to this Greta movement actually become wiser and actually knowing more and trying to make an impact in another way, like actually starting investing in companies that they actually feel about. So this movement is coming from all sides. And of course, you are like the perfect superheroes on each one. That's why you're here. So in terms of this movement coming along, and you can see that it's already there, like how do if you look into the Danish scope of Danish companies, how ready are Danish companies on an average to tackle this movement compared to other places? And don't just say, yeah, we're so good, because we're not. We know that. But, like, come up with some
I think what I experience is that companies are quite mature in thinking about green, thinking about CO2 emissions, GHG, and also
forget about the green. Let's
biodiversity. But,
yeah.
but when it comes to and then they started to have that dialogue. They're not there yet at all. But when it comes to like the social aspect of a company, engaging in their local communities and their supply chain, we don't see that same maturity. I think they have been like quite lucky that we have a welfare system here in Denmark, meaning that where, for example, in South America, we see that huge companies going in and actually being that social system for their employees and also for their local communities. We don't have the same traditions here in Denmark. No. So on the green side, we're quite mature, but we still have long way to go. Also just talking about diversity in workforce and engaging in local communities. We have a long way to go there. But I think once we are like reaching a certain standard within the green, companies are trying to go over to the social aspects of it.
So once they reach like, okay, now we can tick that thing, then now, okay, let's look at the social. Oh, we have diversity. We need to figure out, okay, we need more women in the board.
Exactly.
What do we do? Yeah. Like getting new people, right? Like,
so I think
it's like
having that dialogue. I think a lot of companies have a tendency to don't measure it on it. And I think that's one of the key reasons why they don't have it.
It shouldn't be that hard, right? Like to measure about like how many women, how many males in the board.
Yeah,
like,
but companies are saying that's okay. We don't have that issue here in the Danish market. Okay. And then once starting to measure on it, they actually see that we have huge blind spots in terms of social impact from our companies.
Over to you, Sylvester, because you have been working with a startup called Matter and actually been doing some work on that, and they have been doing some great insights, right? Can you give a little bit brief of like what came up to you like looking into these data? Because data is of course key to get people like aware of, okay, this is not good.
Yeah, no, yeah, absolutely, and it's a great question. I do want to highlight, you know, when I look at Denmark and the Nordics, I mean, what I see is, you know, we stand out incredibly well overall. I know it's not the answer that you want to hear because we still have a lot of shortcomings, but in all of these, there's this Knight's report over the world's 100 most sustainable companies. The Nordic companies are always filling up the top 5. And then I look at, maybe that's also coming back to our fintech partnership. There's so much, when I look at the startup scene, the scale-up scene in Denmark, in Sweden, in Norway, in Finland, I see so much green tech, clean tech. When you look at the companies going on our First North growth markets, you can see that they have one commonality, not all of them, but a lot of them, and that is there is a green footprint that is a focal part of their mission statements. And so I think we are on the right direction. What we wanted to do was to make it easy, as you guys are also suggesting, because there are some blind spots. And there is greenwashing out there. You know, you have companies, and it's probably a natural thing. You have companies out there, since you don't have any true standardization still in place, that is coming now. Probably a lot of you guys have heard about taxonomy. I know you guys have. So you have these standardizations coming into place, but right now, if you're a company, you do really, really well on gender diversity, then that's what you report on quite a lot, which is understandable. But investors, they increasingly want the full picture. Then they want full transparency. They don't want to be greenwashed. And investors, maybe especially young investors, without discriminating other types of investors, I mean, they're incredibly smart. They care about this agenda. They want to know about things from a gender perspective, from an environmental perspective, from a governance perspective. They want everything, and they want to easily compare it. So, okay, so now I understand this is the level of CO2 emissions from company A. That's fine, and I think I kind of know what CO2 emissions are, kind of. But then, more importantly, how does this actually stand out against company B and C and D? And how do they stand out against peers in other countries? And then make an informed investment decision. So that's one thing that we really wanted to do with this fintech partnership of ours, because we identified this group, this startup company. We ended up acquiring a part of them, engaging in a close partnership to develop what we refer to as the Nasdaq ESG footprint, which is just that, where we leverage their tech capabilities, extremely specialized capabilities, to provide these insights, to make it readily available to anyone. The CEO and co-founder of our partner firm, Matter, he has this motto, I think you can call it, that if he's not able to explain what he does to his mom, then it's not worth doing. And I took that in, you know, to a very, very high degree, because I don't think, you know, I'm not sure my mom, when she was still alive, I'm not sure she ever fully understood what I was doing back then. She would have been able to understand exactly what I'm doing right now on this agenda.
But I also think that one of the things that I've seen like over the last years, like now even today, like what is written here is actually like written Green Impact Week, right? And there's like windmills, there's like energy, like solar panels. And I actually think that's a bit wrong in terms of like talking about impact. We have 17 goals. If you are a fan of the goals or not, that's up to you. But ESG is environmental, social, governance, right? Yeah. And we're always talking about this freaking thing, environmental. Of course, it's really, really important. But there's the social part, there's the governance part that is missing out. And actually, that's why, like, for me, when looking at the future of how we have to look at technology companies, we talk green technologies. I think the word green is actually a wrong word sometimes to use, because if you don't understand that green can be also the social side or the governance side, then you're misplaced. We have a lot of companies, we talked about the Dong case, that dung wasn't that green. They were like totally black, black, black. And then they went into green because they transformed. We know Maersk is doing a big, big transformation right now. And there's other companies like Vestas or other like doing this transformation. But they're also doing a transformation on the social side or the governance part. Yeah. But Line, now over to you in terms of like the framework that you're working on now in Post-Smith Kammeradvokaten. How do you take care and be aware that all the other things also matters? Because talent-wise, if you look from talent and acquiring, getting talents on board in your companies, they don't just look for the CO2 footprint, because honestly, nobody understands that footprint, unity yet. Like, I don't know, like I have Nimli.com buying like things, and I can say, okay, I have used so much this week, and last week I used another ton of, CO2 footprint. I don't know that number.
It's very difficult to bring some perspective into it. There are some companies that actually took pride in kind of translating all of your CO2 emissions. So every time you buy a chair or something, you can see that it's equivalent of this many, red steaks or this many car trips or whatever. And I think it's exactly that proportionality that we need. Otherwise, it's just like, I don't know how much a ton of CO2 equivalents are. I can't even, begin to imagine how I reduce that amount. But actually, I think you have a very good point on this one, because actually, if you look down here, there are people down here. So if you kind of bring it back to the people, you'll see that, on the 17 Sustainable Development Goals, they all have a human rights element to them. It's all about, we used to, a couple of years, some of us that are, sort of on the capitalistic side of this, dealing with investors and so on, would be like, well, we're not here to save the world, and we're not here, to save people, but it's actually what we are doing. We are trying to save the world from becoming completely, over flooded, over excessively consumed, and so on. And we do try to take care of the fundamental human rights. And we're actually seeing right now that the human rights are coming into legislation in the EU for the first time, actually being very specifically implemented. So what we try to do with the ESG type of framework that we work on as lawyers is to take a completely holistic view and then bring the materiality into it. So we kind of have catalogs over, what is important for your geographies and what is important based on your industries. And there you can turn also to the EU taxonomy to look at the, in the first wave, they have the industries that emit 80% of the CO2 emissions in the EU. And so that would be transportation, production of aluminium, steel, and so on, all kinds of power distribution and transportation, production, and so on. And of course, that's a huge factor into it, but it is only just one factor. So we also look at, what do the working conditions look like? Again, diversity, what's the need for it? What can you do? And then also on the governance side, what are the kind of risks to this and how have you tried to mitigate these? And then we prioritize it. And we also look at a dimension, again, around stakeholders, because, there are people everywhere. So they are in your community around the production plants. They are, at the end of the river where the chemicals are being emitted to. They are, at the end, very end of your supply chain with, the consumers who actually consume the water and need to know that this is, is it traceable? Is it completely, sufficiently good quality? Does it live up to standards? And then, on that basis, we have a three-step approach. I mean, even with all of the complex information that is combined in this room, it's like we can only deal with so much. So we have get an overview of the requirements and expectations. That's number one. Number two, prioritize your actions and make specific action plans. Nothing, too high level, very specifically into processes. Like there is a candle on the table. It is lit. I want to, put it out. What do I do to put it out? And then as the third step is keep the movement, the continuous improvement, which is also part of the responsible investment principles. And what is the actual traction on this? Where do we need to kind of go back to the overview and see where we need to tighten up and reprioritize perhaps? And I think that three-step approach works very well. So even with companies that are sort of in your segment as well, when we speak to board of directors, CEOs, quality people, or whatever it might be, out in the field with their production sites and so on.
In terms of, so from a business perspective of how you have to reach the goals and how you actually want to be compliant in that sense, we have the consumers or investors or employees on the other side. We've talked a little bit about greenwashing, right? I want to talk about green blushing right now, or green hushing, because there's so many companies, we know that, also in Denmark, that like, if you don't communicate, it's better than communicating, right? So they don't talk about how good they are, because of course we are in Denmark and there's something called janteloven, so you don't want to brag about these things like the American way. But I see a huge risk in not communicating what the fuck you're doing, because the problem here is that not communicating what you're doing is actually giving a bad, like we look at the company and there's like, okay, these guys are not communicating anything, so they're not doing anything, but they might do something. But the limit of their level of when to start communicating, sometimes it's too late. So how do we make sure that these green companies get out there and actually being transparent? Because there's not so many CEOs right there actually coming more and more, of course, being open and honest about saying, look guys, we are not there yet. We have a 2050 something plan, and we know that we're not going to make it. We have a 2031, we are trying to get there, and we have something which is short term. And getting out there and actually be open and honest about it, because what I've seen also in terms of looking at the younger segment is actually that younger individuals actually tend to actually being okay that you're not perfect. Because the older generation, you have to be perfectly fine. I've been working in the banking, and there's nothing stating that they're perfect at all, right? And we can see that right now because they're getting into different shitstorms day in, day out, even with the negative interest rates. So how do you look at companies in the future of being, holding back on their communication? Because communication is everything. If you don't communicate stuff, people don't know, right?
True.
Any thoughts?
I think that's true. And I think that the younger generation, as you say, are really quite positive on companies being transparent about where they're at their journey. I think we don't, now I say we, I see myself as a young person as well. We don't necessarily want companies to be perfect, but we are wanting to be engaged in their journey towards sustainability or impact. So we want companies to not only just communicate and tapping themselves on their shoulder. We are wanting companies to communicate about impact, sustainability, call it whatever you want, and inviting people along on the journey. I think going back to one of your examples on the BCorp, we have the Dutch Tony Chocolonely, a company that started out as a TV series, a TV reporter going out investigating child slavery in chocolate production. He found that it was a huge amount. I think right now 600,000 people are working as child slaves in chocolate production in Western Africa. And he said, we need to do something about it. And they're now calling themselves an impact company making chocolate. And what they're doing is they're trying to fix the value chain of chocolate production. Because right now we've spent a long time just fucking it up and becoming very blurred, and you're buying stuff in an auction, so you don't necessarily are able to track it back to
commodities, right?
the farms, and then you can wash your hands saying, we do recognize there's child slavery in chocolate production, but you cannot track my chocolate back to the farm. So they're trying to make the sourcing of chocolate transparent. And what they're doing is that they lead by example. That they also have a three-step way of doing business. They lead by example. They invite people in, and they are doing this 5 sourcing principles. They are, paying people a living wage. They are so they can invest in their children's school. They are paying so they can actually grow their farms instead of always decreasing their farms and having more and more scarce production. And then they are inviting other companies to join them and steal their idea. So what they're seeing right now, if you have ever been to Irma, I think you've noticed it, and you can buy that caramel sea salt one. And what they're saying is that
that's a good one, by the way. That's a really, really good one.
And tons of companies has already
caramel sea salt,
took that idea and made their own chocolate about it. And Insu van Zanten, a fantastic guy, you should look him up. He's called the chief evangelist. So he tells the story about Tony Sugar Lonely. And he said, it's funny because a lot of people are stealing our taste, but they don't steal our sourcing principles, which is actually open source as well. So they are like really transparent, saying that we are doing this. This is not, and they also acknowledge that this is not perfect at all. There's still a long way to go, but they're really inspiring other companies to join them in using their and stealing their sourcing principles throughout their supply chain. And I think that is what we're going to do, and that is what we need to do, not only in the supply chain, but also in throughout our entire value chain. Being open about it, inspiring others, inviting people in, not only people, but also companies. What we're seeing, for example, in the BCorp movement is that we have this called the BCorp Climate Collective, where we are trying to meet the goals of the Paris Agreement by 2030. And not only in our own operations, but throughout our entire value chain. And the BCorp movement is made out of smaller companies, small and middle-sized companies, and they couldn't do that themselves. So what we've done is we've gathered them all and said, this is a journey that we do together. So I think that's the way that we need to do it. I think we need to be open about we're not perfect. We need to be transparent, invite people in, and then collaborate on reaching our goals, because it's not about getting there first. I think it's more about getting there.
And I also think that you're touching really much about this partnership model of whether you're collaboration or partnership. Like it's all about I reckon the way that you guys did it with the Nasdaq and Matter. Like, okay, we need to do it. Like we have a bigger purpose. We need to do that. I remember that I was asked several times throughout our startup journey. It's like, hey, what if there's somebody else who's doing it better than you? It's like, hey, I'll join them then, because if they're doing it better than me, then why not join them and actually be on their ride, right? So it's all about looking at the Northern Light or Northern Star, saying this is the purpose. Let's get there together. I saw Vestas talking about green tech, companies in Denmark. Like Vestas have bought did a partnership with a Swedish tree productive company who's doing this windmill towers in tree. Like they are not there yet. 3 years ago, that one founder had a great idea, and now they did the first one, right? And you know that big cement companies are still working on trying to be much more sustainable in that way. But Vestas, being a big major producer and player in this set, getting into this partnership because we have a common goal of making it more sustainable to actually develop windmills, because it might be that a windmill is great and it gives a lot of energy, but it costs a lot of money to actually produce these ones. Like Maersk with their ships, it might be that they have this 2050 strategy, but nobody knows that it takes around 20 to 30 years to actually develop a new ship. So if they didn't start it last year or the year before, then they wouldn't meet the 2050 goals. So of course, some of these transitions takes a long time, but how you communicate with this and how you make sure that you even get your employees, your investors, or your consumers involved in that actually creates the movement in some way. Do you have some examples Sylvester from your, if you're looking at your listed companies, maybe you have some examples of where you have seen these?
Yeah, I was just thinking about it. I mean, there's a trend right now of different providers launching Paris alignment funds. So typically a basket of different stocks, different companies, in other words, that have set a series of ambitious targets, ambitious green targets. And another commonality, apart from having those targets, is that they are coming from a place that is totally on-green. But it's what we see, it's what we hear, and more importantly, it's what we can tell from market statistics. We're seeing this massive inflow into companies that are highly transparent about what they do, what they have been doing, so investors can track the actual green performance relative to the targets that have previously been set. I think that's key. And then it's very easy to forgive a company if the company has proven a certain track record in setting targets and actually meeting them, low or high. And you have some sectors like the shipping business where it takes time because you have a fleet. And it requires a lot of money. It requires a lot of transition to suddenly shift that paradigm. And then I just got to say, I mean, I think most listed companies now, they are so aware of the regulatory scrutiny. They know TCFD is like a minimum requirement on reporting coming into force. They are working on it. They're working very hard on it. They're working very hard on taxonomy, which in turn helps us in building the platforms. So the easier it is on the companies to report on a standardized format, the easier it is for us to provide it in a very, very comparable manner, so investors can actually look upon it and make their decisions. And I was just thinking back of what you said before in terms of the customer journey. I think that's really key, and I think it's something that parts of the trading, investment, banking industry has missed out on a little bit.
A little bit.
Or a lot. There are a lot of funds out there, so you have issuers of funds kind of deciding this is a basket of stocks, you can invest in that, and then you invest in something that is green, for instance. But I think what they're missing is this growing trend, especially on the retail side, so regular private investors like us here. The individual needs that are actually arising, I think that's been missing quite a lot. And it's what our first partnership on Nasdaq ESG footprint was with Nordea, and what we jointly did was actually to visualize kind of what you guys were saying before. This portfolio, what does it actually mean on CO2 emissions compared to cars, number of cars per year, something that households can actually relate to. And I think that's slowly starting to increase. I'm not sure that the financial industry is totally where they should be compared to where the appetite is on investors. They don't just want to buy in funds that others have selected based on other rating agencies' criteria. They want to invest based on their own beliefs. Yeah. Maybe they care about SDG goal 2 or 13. Maybe it's more project-based. That's what we're seeing.
We're seeing the same thing in Make Impact, especially with the younger generation, actually being based on their values and how they look at it. Like an example, like you mentioned Nordea and you mentioned this thing. Like I talked to Mads Skovlund, who is like the head of personal banking Denmark. And after you guys launched it, like he had a client in his phone, and he said like, look, I flew out to London with one, airline, and then I flew back with another one. And I get totally different CO2 emission, like how? Like it's the same like direction. And how can that be? And that's back to the companies, how they calculate shit. Yeah. Because sometimes they're for getting the numbers great, they want to do that. The last thing I just want to ask you guys about is like, we see different new companies being IPO'd, actually getting on the stock market to actually that. Last week, Oatly, a Swedish oat, company doing oat milk and stuff like that, went on the stock exchange. And we could see a lot of hype in that, brand and also investment, because we have also seen Beyond Meat being putting to the roof in terms of investment side. How do you see new companies, green or impact driven or something like, getting on this market, and also in terms of like the investors? Because back to the values, like I was like to my wife, like, hey, should we invest in Oatly? Because like we use a lot of oat milk at home. So why not invest in something that we actually believe will stick, and be in the future, right? What's your thoughts on that?
It's completely crucial to take this into perspective. First, of course, again, for the investor side, it is very stakeholder driven on that end. And plus, they're also encompassed by the taxonomy regulations, so they will need to actually account for it. And that will help create some of the transparency, where we again need some of the tools. And coming back to your question from before, what should they be doing? It's like, well, get started and just don't stop. So even if your ambitions are not completely aligned with your actions yet, just set targets and get out there and show the world. And then just remember to cover your hindsight, so you don't actually greenwash. But it is very crucial. Investors are definitely asking for it as well.
Great. I think that's it. Thank you, everyone, for watching and being on time. ESG is not just about green, it's environmental, social governance. So please make sure that you look at a company, if you want to invest in it, or you want to buy a product, or you want to be like employee, that looking at all the different aspects, because that's what we believe in, like all of us, and have a great evening.